In this presentation, we will take a look at multiple choice questions related to financial statement analysis, going through those questions and then practicing test-taking skills with them. First question, net sales of $765,000, net income of $142,000, and total assets of $5 million. The profit margin is either, and we have our answers over here. We can see the format of the answers, which might give us an idea. Notice that they're playing a lot with the formatting of the answers, so we may actually be able to guess the answer here by just picking the proper formatting of the three that look the most likely. But let's see what we get in the calculation. Let's move on over to Excel. Profit margin. So we have the net sales. Remember that net sales means basically the top line of the income statement. That's going to be like the revenue account. Why is it net? Because it's net of the contra sales accounts, which would be something like allowance for doubtful or allowance accounts for returns and allowances and discounts. So this is basically the top line of the income statement. We're going to compare that to the bottom line of the income statement, that being net income. So net income and net sales, not the same thing. Net income, bottom line of the income statement, that being the $142,000, and then we have the total assets of the $5 million. We're looking for the profit margin. Now, profit margin, you're thinking income statement. Profit margin, income statement. So we're not really considering the total assets. That's there to throw us off. They're giving us added information, not necessarily information that we need for the problem at hand. So then we're going to go ahead and do the division here. We got the sales, $765,000 divided by the net income. That's going to give us 5, and note that's backwards, so I did that backwards, because what we want to take is the net income, 142,000 divided by the 765,000. And note that's one way you can kind of look at these answers and start to say, well, if you don't know which way, it's probably a division problem. We've figured out that we're going to be dealing with income statement accounts, not the asset account, and then which one do we divide out? Well, if we get an answer like 5, probably not lining up to the answers that are being shown to us. We might see it. If we see it there, it doesn't necessarily mean it's right. If we have a question, we want to calculate both of them and then consider what the answer looks like. But the answer, if I make a percentage of this, 19%, would make more sense, wouldn't it? Because now we're thinking about what is the bottom line relation to net income. In other words, how much are we walking away with relation to every dollar of sale? So we're comparing the net income to the sales line. So we got 19. If we add some decimals to it, 19.56. That looks like a format of the answer we would want, or not 19.56, 18.56. And then if we go back over here, we see that the different formats of the answer. We've got 0.1856. Well, no, it would be 0.1856 without the percentage, not 0.18. And then 18.56%. That doesn't seem right. It's not 21, and then it's going to be the 18.56. So really, this has to deal with formatting. We probably could have kind of figured out that it's going to be basically between, you would think, these two, just given the formatting of the problem. And the fact that these have more 3 versus 2, you would think that it would be E. You could guess without even doing calculations and be fairly accurate with that. Next question. Net income divided by average total assets, is that going to be the A, the profit margin, B, total asset turnover, C, return on total assets, D, quick ratio, or E, current ratio? Let's go through this again using the process of elimination. Net income divided by average total assets, is it A, the profit margin? So we've got net income, so that makes sense, but we got divided by the average total assets. That's going to be a balance sheet account. So the profit margin, typically you're thinking about income statement stuff, right? Profit margin, income statement timing, how are we doing type of account. So that doesn't seem like it would be dealing with the assets. And then the second one says total asset turnover. So that's got assets in it, and it's got the income in it. So that could be possible. So we'll keep that one for now. And then we have the return on total assets. And again, we've got total assets in it, return on assets. That seems like it could be one. Next one says quick ratio. That's got assets in it, but it's going to be the quick assets divided by the current liabilities. And again, that's probably the one we should know pretty well. Current ratio and the quick ratio. And those don't seem right here. This isn't the calculation for the quick ratio or the current ratio. So we should be able to eliminate those and break it down to B or C. Net income divided by average total assets is. Now this could be a little bit confusing because these are two ratios that are fairly similar. The total asset turnover isn't going to be dealing with the net income, however. So it's going to, and the return on total assets, in other words, is. So if you were to see this type of problem, total assets, if you're thinking about total assets, you're probably comparing them to something on the income statement. The only two accounts it would be appropriate to compare on the income statement, you would think, for total assets, or two of the main accounts we would think would be the top line revenue and the bottom line net income. Top line revenue, bottom line net income. In this case, we're talking about the bottom line, which is going to be the net income, not the net sales. We're not talking about the top line net revenue. We're talking about the bottom line net income. That relates to C, the return on total assets.